Boom. All right, what's up, you guys? It's Roy, it's Jacob. Welcome back to the channel. In this video, we are going to be talking about what may have been the craziest week of earnings that the stock market has ever seen. It's definitely the craziest week that big tech has ever seen, with mega cap companies, the blue chips, titans of industry like Amazon, Google, Netflix, Facebook, adding and subtracting hundreds of billions of dollars from their market caps within the span of minutes following some of these earnings calls. This is a gnarly stock market, you guys, and we do have a lot to cover today. We're going to talk over some of these earnings, go over some of the metrics that were announced in these earnings reports, and I also just want to give you guys my general thoughts on the current state of the overall market environment, and also talk to you guys about why I'm still very hesitant on the fact that we will be resuming the bull market that we've been seeing over the past couple of years. All right, so let's get into it. We'll quickly go over all of the tabs we'll be discussing, and then we'll dive into each one individually. To kick it off, we got to talk the earnings call that just shook the markets today following a very bloody day. Okay, so again, you guys, this volatility, as I just said in the newsletter the other day, I think I mentioned this in yesterday's video as well, volatility is typically not the sign of a resumption of a bull market. It's typically the sign of the end of a bull market. And again, this is arguably the most volatile the stock market has ever been. There's more cash flying around, just being injected and being burned out of some of these companies than there ever has been in the history of the markets. Okay, so kick it off with Amazon shares soar on cloud revenue beat and huge profit gain from Rivian stake. I think this is an absolutely whack statement, and this has no merit to it at all. I'll talk a little bit more about that when we dive into the article. After that, we'll talk good old Meta, or Facebook. So Facebook stock plummets. This was yesterday at the time of recording this Thursday afternoon, February 3rd. Facebook stock plummets 26% in his biggest one-day drop ever. So we'll talk over this. Good old Zuck got his world absolutely rocked yesterday. So we'll go over this, and then we'll go over this other earnings call that just occurred today as well, along with Amazon. Snap shares rocket as much as 62% on first ever quarterly net profit. All right, so as you guys know, these are only a few of the earnings, and Snapchat is not necessarily a big company, but the volatility that's this price action is expressing is a great micro example of just the macro mania that's happening across big tech right now. Okay, I would consider Snapchat big tech. Okay. So we'll cover this as well. Obviously, you guys, Google announced a couple of days ago as well, absolutely crushed earnings. They were up like 10%. Google is a $2 trillion company, so that equates to like just under $200 billion of market cap added. Facebook, again, there's just hundreds of billions of dollars being flown around within the span of minutes following some of these earnings calls, and it's just extremely not healthy. Okay, so on that note, while we're kind of talking fundamentals and just general health and status of the stock market from a historical perspective, I do want to talk to you guys about the good old PE ratio, or the price to earnings ratio. Okay, we'll talk about this when it's necessary, just before kind of diving into the charts. Okay, take a look at Amazon on the charts, and I do want to take a look at a few of these other PE ratios, just to show you guys again how some of these big tech companies, how some of these blue chips are looking from a historical perspective when it comes to this price to earnings ratio. All right, we'll also take a look at, as I just mentioned, historical PEs, go over a few metrics that just put things in perspective once again. And again, this does reinforce just the mania that the market is seeing right now. All right, so we'll go over that and then close out the video with something super controversial. We will talk Tesla. I do want to talk to you guys about Tesla on the charts, just because right now Tesla is trading at a price to earnings ratio of 290. Average US equity PE ratio from 1900 to 05 is 14. So again, that's just a little hint of how crazy the market environment is and how manic it is as well. Okay, so that's everything, you guys. Let's dive into this article. Before we do, though, please throw the video a like. That really means a lot. And let me know in the comments down below what you're thinking about the markets right now, if you've been playing any of these earnings, how you've been doing. And again, it's just crazy, so just stay on your toes, you guys, and stay smart. Do your best to stay rational in this absolutely wild and manic environment. All right, also, please I don't know if we're ever getting to 50K, but help your boy get to 50K. That would mean a lot as well. Subscribe to the channel if for some reason you are not already. Join the Wave fam. Okay, so key points right here. Amazon shares rallied in extended trading Thursday after the company posted a big earnings beat for the fourth quarter, helped by a gain on its investment in electric vehicle company Rivian. The company also disclosed revenue from its fast-growing advertising business for the first time. So, Amazon on Thursday said revenue climbed 9% in the fourth quarter, and the company reported a gain of almost $12 billion from its investment in electrical vehicle company Rivian. Now, that is such a whack statement because that's like saying, I mean, Lucid is a great example of this, and I did like Lucid for a long time at more reasonable valuations, but again, you guys, a company like Rivian, although it has the Amazon cosign, which is huge, coming back to the PE ratio, I don't know what Rivian's PE ratio is. You guys can go look at it. Rivian is not by any means a profitable company, and I know for a fact their market cap cannot justify the reality of what they'll see, even in the best case scenario over the course of the next 20 to 30 years. Okay, so Rivian, this is wild, and obviously this works both ways. If Rivian depreciates in value, that will also affect Amazon stock in a negative way and their profits in a negative way as well, okay? Which obviously Rivian is not performing as it was just a few months ago, okay? So that's important to remember as well. Amazon shares popped as much as 14% in extended trading. Should the stock sustain this rally on Friday, it would be the biggest one-day gain since 2012. Here are the numbers. EPS adjusted 580 versus 357. Revenue 137.4 bill versus 137.6 bill, which is pretty, I mean, right in line with what everyone was guessing. And AWS revenue, this was what I thought could be the dark horse in this earnings call, which was impressive, but not exceptionally impressive, especially in the wake of so many chip makers and like players like Google really excelling in this field. Okay, so 17.8 bill versus 17.37 bill expected. Okay, so again, numbers here pretty impressive. The fact that it's even being mentioned that the revenue from Rivian is significant by any means, and at 12 bill, obviously significant, but that's super sketch in my mind, you guys. I do not think that warrants the growth, the aftermarket pop that we saw today. Although Amazon was down. If you can see here, Amazon was down almost 8% during actual market hours and ended up popping, like 15% at the time of recording. So actually equates to a 7-8% jump on the day overall. But still, you guys, this is sketch. I don't like seeing Rivian profits in here at all. Rivian profits in here. So again, you guys, this just speaks once again to the mania in this market, to kind of the lack of rationale that's currently present in this market, especially in the wake of everything we've been talking about. Again, interest rates raising, the Fed stepping in, the dollar is beginning to lose strength once again, which is like, everything's weird right now, you guys. The macroeconomic climate is super out of whack right now, which, just in my mind at least, from kind of a commonsensical perspective, that's a bad sign, and that's a bearish sign. As I said in the beginning, again, volatility is not the signal of a continuation of a bull market. It typically signals the end of a bull market, okay? So again, we'll take a look at some of these PE ratios after. Let's take a look at Snap. Actually, you know what? We can look at the PE ratio right now, okay? So price to earnings ratio, and then we'll take a look at Amazon on the charts real quick, and then we can go over Snap, Facebook and Snap, and then close it out with, again, controversial, love Tesla, but bearish Tesla. I'll explain to you guys why that is at the end, okay? So price to earnings ratio. The price earnings ratio, also known as PE, is the ratio of a company's share price to the company's earnings per share. The ratio is used for valuing companies and to find out whether they are overvalued or undervalued. So PE is share price over earnings per share. All right, so historical PE ratios for the U.S. market. Since 1900, the average PE ratio for the S&P index has ranged from 4.78 in December of 1920, that's a lifetime ago, that barely counts, to 44.2 in December of 1999, which is the peak of the dot-com bubble, okay, which I'm sure I wasn't trading, obviously, during that time. I was like 4 years old, but a lot of people, a lot of veteran traders have been saying that this environment is currently very reminiscent of that dot-com bubble. Okay, so however, except for some brief periods during 1920 to 1990, the PE ratio is mostly between 10 and 20. The average US equity PE ratio from 1900 to 05 is 14 or 16, depending on whether the geometric mean and arithmetic mean respectively is used to average. Okay, so let's just say conservatively on the high end, average is going to be 20, right? So 20 is on the high end of PE ratios, and in the peak of the dot-com bubble, it was 44.2. Okay, that was the average at the peak of the dot-com bubble. Right now, Amazon, even after today's big pop, is at a current PE ratio of 58. So it's at 60. Remember, the average at the peak of the dot-com bubble in 1999 was 40, and we're currently at 60. Okay, and that's Amazon. So that's important to keep in mind as well. Again, Tesla is at 293, I believe. We'll take a look at that after, but that just puts things into perspective, even after these corrective movements, especially in the wake, again, you guys, of raising rates. That is inevitably going to happen, especially considering the economy is slowing down. Again, AWS saved the day. Their investment saved the day because November was extremely inflated when it came to growth sectors of the equity markets. Rivian, again, you guys, the price action that Rivian's seen cannot be justified rationally, even in the best case scenarios over the course of decades. All right, and that's just the reality of what's going on in the market right now. So Amazon current EPS just under 50. And historic PE ratio, even at the height, once again, of that dot-com bubble, was, not 40, but 45, just under 45. All right, so let's talk Facebook. Shares of Facebook parent Meta closed down more than 26% Thursday, even after the company forecasted weaker than expected revenue growth in the next quarter. It also said it's taken a big hit from Apple's privacy changes and showed the first quarterly decline in daily active users on record. The stock finished with its biggest one-day drop ever, ahead of the 19% plummet we saw in July 2018. Thursday's drop shaved more than $230 billion from its market cap, bringing it to about $660 billion. So Facebook at this point in time is a lot more appealing to me than Amazon, although the market is not reacting that way, which is another reason that I do believe things are just freaking out of whack right now, honestly. So Facebook, as you can see here, is almost at the level we were at before the whole pandemic happened right here, okay? So we're very close to that, pretty much erasing all the gains we've seen since that Black Swan event that catalyzed the sell-off. But again, the high we saw back here in January of 2020, 2 years ago now, we're pretty much right. So 2 years of gains has pretty much been erased. And Facebook's PE ratio is currently sitting at 23, which is very, very reasonable, especially considering Facebook. Now, Meta, of course, is pioneering, I know, a space we're all obviously bullish on, and that is the metaverse, okay? Not decentralized. Again, that's not the argument right now, but the macro trend that is the metaverse, okay? They're literally meta now. Okay, so Facebook, again, do I think we'll see a massive bounce back? Maybe in Facebook, but again, you guys, Amazon, players like Tesla are just absolutely out of whack. I haven't even looked at Google's PE. What's Google's PE? Google, honestly, might be the single greatest company to ever exist. So Google's PE ratio is currently at 26, even after this price action. So Google, I have nothing bad to say about Google. I think in a macro, just considering, again, this stock market is super out of whack right now. If the greater markets fall, I do like there's just negative sentiment. There's just a cloud over the markets, regardless of these crazy moves to the upside. There's still moves to the downside. And again, volatility. This is not a healthy market environment. So Google, although the price to earnings ratio is healthy, although Google, again, arguably maybe the best from an actual value investment perspective, maybe the best company to ever walk this earth. I do still think Google could see some downside just in the wake of everything going on. Just again, in general, fear and raising rates, which by the nature of raising rates depreciates the revenue, the value revenue, the value of the USD achieved by these companies. Okay, so let's take a look at. PayPal saw the same thing. Take a look at PayPal. PayPal also diving. PayPal having actually below where it was back before we sold off 2 years ago. And yeah, that's crazy. But PayPal owns Venmo. Some of their numbers, because they own eBay as well, it almost counters it out because eBay is such a dying business. PayPal is a weird one, but again, long term, do you think, and you can think the same thing about a lot of these long term, I'm talking about like medium term, you guys, I'm talking about like months out, maybe a semester out, okay? But 5-10 years from now, do you think if you think these companies will be around, if you think you're still going to be using Venmo, okay, then maybe dip buys are a good idea. Okay, so that's PayPal. Snap, this is a weird one. So Snap shares rocket as much as 62% on first ever quarterly net profit. So key points here: Snap reported earnings for the fourth quarter Thursday that beat analyst estimates on earnings, revenue, and user growth. The report marks Snap's first profitable quarter on a net income basis as a public company. The report comes a day after Facebook parent Meta delivered disappointing guidance for the first quarter that dragged down several social media stocks, including its own. So again, you guys, this is where logic is just, you completely discount logic, okay? Google's ad revenue was up. Facebook's was down. Amazon doing good. Amazon very consumer facing. Facebook probably had in the Oculus the most profitable and popular gift of the Christmas season of 2021. But like, it's just nothing is really making sense. Amazon pumping after hours because Rivian, their investment in Rivian, which is a hyperinflated, hyper growth mania stock, like things just aren't adding up. And again, the market's the market. I'm not gonna say that it needs to be rational. The market ultimately is the market, and I'm just here to say that this, in my beliefs right now, nothing is really stacking up as it should be. Okay, so Facebook just flipped a profit for the first time. The fact that they're adding like 13 million daily active users in Q4 is pretty honestly insane. Which is interesting, especially in the wake of TikTok and stuff kind of taking over the market. So that is cool. That's good for Snapchat. I do think Snapchat was undervalued going into today. I wish I realized Snapchat's earnings was today. I was just so distracted by plays like Amazon that I didn't even realize. But Snap, good for Snap. Again though, 62% in after hours trading. That's like trading like a shit coin. Okay, that's straight up price action that like Doge and Shiba would see on its craziest day last year. Okay, so that is Snap. Not looking at Snap, but again, you guys, just to round out this video, I do want to talk about Tesla and show you guys Tesla on the weekly charts. These are all weekly charts, all right? And the reason for this is, once again, regardless of the fact whether or not tomorrow, when you guys are watching this, whether the first couple sessions of next week do see a little short-term bounce to the upside, things are just still sketchy. Things are still inflated from a historical perspective. And in this, again, this fundamental environment, this macro environment of raising interest rates, okay, the Fed actually drawing their sword finally and not just injecting liquidity into the markets for the first time since this bull market began, again, back in 2020, we are finally seeing, hopefully we see some rationale set back in the markets. Obviously, I'm biased. I am short the markets, so I want that to happen. But again, hopefully I'm properly articulating my rationale here for you guys. And yeah, just let me know if you guys feel the same way, or if you guys are like, fuck it, just keep the party rolling, okay? So, Tesla, right off the bat, I was talking to someone in the Discord. Right now, shout out, we'll read through this guy, the little excerpt I wrote on Tesla in this morning's newsletter, part 2 of this morning's newsletter. And of course, you guys, if you do want a complete breakdown of my personal portfolio, you want to know what I'm trading on a daily basis, you want to know why I'm trading it, through the intro to the newsletter, through part 2, which has all of like just a bunch of charts and whatnot that I send out every single trading day during market hours, along with the exclusive Sunday stock watch. Not making a video tomorrow, Fridays, for the fam. I do hop into the Discord, however, I do again make the Sunday stock watch. I do give out that private link to the Sunday stock watch, to the portfolio and the Discord. So go check those out, you guys, for the portfolio. $15 a month or $40 for every 3. Completely up to you. That's the first link down below. Discord link down below as well. That really means a lot. But let's quickly read over this and then we'll dive into Tesla on the charts. Okay, so first off, just looking at Tesla's macro chart, daily, weekly candles, we're on the weekly candles here, is all I really need to be medium-term bearish on this stock. It looks eerily similar to every other hype cycle that I've ever played, and the manic retail environment perfectly suits the charts. Okay, so again, you guys, Tesla is super, in my mind, super similar to Bitcoin, okay? Obviously has a place in this world, obviously a titan of industry, once again, obviously has established its place as one of the most perceived valuable assets in the world, okay? I personally think Bitcoin serves more of a purpose than Tesla right now. I think more growth is ahead for Bitcoin than it is for Tesla, if I'm being completely honest. I think the majority of at least Tesla's practical growth is going to be behind it from, again, Tesla, AI company, energy company, tech company, which is true. But right now, the primary source of their revenue is vehicles. And I mean, for GM, every freaking car manufacturer on the planet is coming out with electric vehicles, and sick electric vehicles at that. And that will undoubtedly make a fat dent in Tesla's bottom line. Okay, so Tesla, as I just said there, Tesla, I've never seen a chart that looks like this. Okay, if we zoom out here, just going back to like just over here since Tesla IPO'd back here. Okay, no, Tesla did not IPO back there. Just go like this, you guys, and just look at that chart. Okay, so no chart that I've ever seen that looks like this. I'm sorry, there's lines here, but you guys get the gist. A little two-wave action right here from a super zoomed out perspective, super macro. I've never seen a chart that looks like this that just kept going up. Okay, so again, Tesla, as we're talking PE ratio, historic PE ratio, 14, just 20 on the high end. Tesla's PE ratio, as you can see right here, is currently sitting at 293.25. Okay, so that's even on the absolute high end, even on the most inflated possible, like even on the most, like this spectrum is going 360, 720, okay? On that spectrum, this thing's a freaking flywheel, okay? So again, price to earnings ratio for Tesla is currently 293, even following the correction seen over the past couple of months. And again, you guys, just from a macro perspective, just from being someone who's played, this is very macro. This is a long time horizon, but just someone who's played, again, the majority of everything I've ever made in the markets has been by capitalizing on these bull rallies, on these manic hype cycles. Okay, that last, again, usually span from like 2 weeks to 2 months. That's kind of the typical time horizon for charts that look like this. But that's the crazy thing about Tesla, is that it's zoomed out, and this is over the span of like right here. I mean, this is where we were on February 2020. Like Facebook is now back down here. Okay, so just to put things in perspective, where Facebook is now would put, like, if Tesla saw a correction that was equivalent to what Facebook is seeing right now and just erased all of its gains that it's seen over the past 2 years, Tesla would be at 177, just call it $180, okay? So these trend lines right here, I'm personally short Tesla. Again, if you guys want to know exactly what puts I have on Tesla right now, newsletter portfolio. But if you guys want to know when I'm taking profits, when I'm buying, when I'm selling, literally everything in the portfolio. But anyway, Tesla, that's what like some of these ranges are right here. If Tesla, just again, for a thought experiment, not even going to talk about these right now. If Tesla were to see a pullback equivalent to Facebook, that would take Tesla down to $180, okay? And that is an actual popping of a bubble. And again, with competition on the horizon, with like more competition than ever on the horizon, I still believe, again, Tesla, do I think it comes back down to $180? Absolutely not. But do I think it comes back down to $500? I absolutely do, just where we were back in like August of 2020 after that crazy initial hype rally. Like, even if you just go back here, you guys, just looking at what happened in 2020, from the high that we saw back in 2020, like before, again, even that Black Swan event, the sell-off, the high we saw over here to this high we saw just months later, Tesla over 2x, almost 3x, up 165% just in the span of, I mean, less than a year, okay? So things are just out of whack, and obviously, again, that looks crazy. This looks even freaking crazier. Like, this is just a manic environment. Will Tesla... could we see more short-term upside? Absolutely. After everything we just talked about, this market is obviously irrational. But again, always know my money's where my mouth is, and I do think that reality has some catching, or Tesla, reality will catch up with Tesla, at least historical reality. History doesn't always repeat itself, but it does rhyme. The market environment is completely different than it's ever been. I realize that. But again, there has to be some catch-up played at some point, okay? I believe in the balance of nature, and things need to balance themselves out just a little more. All right, so again, if you think I'm whack, let me know in the comments down below. But as always, let me know why that is. And just let me know whatever you guys are thinking. If you think I missed anything, if you have anything to add to this conversation, look forward to talking to you guys downstairs in the comments. And again, as always, take action, make waves. Peace.